right, everybody. Welcome back to another episode of the Study Wealth podcast. I am pleased to have with me Dave Schassler. He's, I guess, an old friend of the show. He's the head of multi-asset at VanEck. Dave, how you doing?
Good. James, thanks for having me back.
It's great to have you here. I was telling you before off camera when we spoke last autumn, that was very well received. So I was very pleased to hear that you're willing to join us again for another chat. So let's kind of catch up where we are in your view. Last time, just to kind of maybe rewind, we were talking about sort of the higher inflation for longer theme, and not to put words in your mouth, but I think you and I are both of the view that we would likely see persistent inflation, not the sort of crazy type, but something higher than we've seen for the past 20, 30 years or something like that. Um, where are you right now? We want to touch on a few things. We're going to touch on AI, energy, inflation. Give me your sort of 30,000 foot view, and then we'll dive into those three things.
Yeah, maybe just take a step back for 1 second just to kind of tee up a little bit about where we approach this from. So,
Mhm.
multi-asset solutions, we invest across asset classes, trying to outperform across different economic regimes. So we consider ourselves a macro shop. So we're always thinking about these big picture ideas. I'm a big hockey fan. I got 4 kids that play hockey, and the way that I think about it is I steal a quote from Wayne Gretzky. I actually think it came from his father. I skate to where the puck is going, not to where it's been. And we're always trying to think about, well, what's going to happen next? And then as we do that, we come back to a few different ideas. We think right now is a wild time to be around. I write a monthly commentary, and when we first started writing the monthly commentary, people were saying, well, are you going to have enough to write about every 4 weeks? I could write a commentary every day about what's happening right now because there's just so much to talk about. There's three things that we're talking about right now, and they're really impactful, right? The first is AI. AI is a general purpose technology. Other examples of general purpose technologies, right? The wheel, the steam engine, electricity, computer, internet, and now AI. We believe that AI will be at least as impactful as the internet and computer were. The big difference is innovation happens a lot faster this time, right? The internet came out. It took over a decade, right, for you to be able to sit there and seamlessly buy whatever you wanted to from Amazon, have it hugely deflationary, and get your goods and services tomorrow, right? Because we didn't have the infrastructure. AI happens really fast, changes the world really fast. You can make a lot of money if you're positioned the right way, so we'll talk about that. The other two themes, last time I was on, we talked about inflation. That's not going anywhere. Inflation's here to stay. We're in a debt trap. The way out of this is through inflation. Inflation's actually the cure of the disease that we're suffering from, because you can pay back your debts from yesterday with money that's worth less today. So what people are what we're trying to kind of protect against is actually the cure, right? And that's the unfortunate spot that we're in out of necessity. And the last thing is energy. We're going to need more energy. The world that we're in is going to need more energy. It's going to need durable energy. It's going to need sustainable energy, and we're not going to be able to wreck the world in the meantime through it. So there's going to be energy transition, but it's not going to be wind and solar, right? Tried there, right? We tried that. We spent a lot of money, and we don't have a lot to show for it. So we think the world's going towards nuclear. In the meantime, we're going to burn a lot of fossil fuels because that's what we have now. And those are the big themes, and I could talk a lot about those individual themes. So I'll pause. I threw a lot at you.
It's a lot, but it's good. I mean, these are, very much the focal points when we talk to clients, and really, my views are very similar here, very much lining up with yours, as we found out last time around too. But I mean, just quickly before we go, and I think we should start with AI, and then kind of go in sequence with that. But the inflation thing has been throwing a lot of people off. I think a lot of people have still not understood how important it is to be long inflation, because a lot of people are actually short inflation in their portfolios. So think about their equity, growth equities and fixed income exposure. And so I think the headlines around inflation has been quite confusing to people, because they say, oh, it's down from 9 to 2 or 2.5. And like, what do you mean it's going up? Well, so maybe we can touch on that a little bit more afterwards, because I know a lot of people are trying to kind of wrap their head around this, but people like the idea of like kind of being able to own inflation, like beat it, like beat inflation. That's kind of like where they get excited about it. So let's get started with AI. When we talk about AI, obviously there's a lot to unpack. There's a lot of different aspects. The only thing that I want to just quickly maybe get out of the way is none of what we're talking about here is or recommendations. It's purely educational. No one's getting paid here. I'm just very honored to have David on here. He's not paying me. I'm not paying him for this. It's just a good conversation of topics we think are very important. Nor are we saying to go out there and chart chase, the latest AI stock that just hockey sticked, to your point, to the upper right hand corner. But AI, I know you're very excited about it. We had our pre video talk. Where do you think this really comes down to? It's ultimately a growth engine, faster, maybe more. Give us your view on that.
AI adoption is still relatively low. Even, we're trying to push AI adoption everywhere, right, through our organization as well. And I think I'll just talk about it for myself. I use AI all day. I think about AI as a companion, right, to drive efficiency and make me more productive. My estimate on my productivity has gone up at least 20% through the use of AI. I think as people adopt that, they're gonna have the same benefits, and I think that those benefits are going to compound on top of each other, and they're going to drive us to an interesting place that's going to look a lot different 2, 3, 5 years out than what it looks like right now. That productivity is going to drive a wave of growth and end us up in a higher than typical growth trend, which is all fantastic. It's going to disrupt things. There's going to be losers here, right? Just when the internet came out, right? Some companies go away, right? Some jobs go away for the betterment of society, right? Sears is not around anymore here in the United States, right? That was replaced by Amazon. Netflix, ate Blockbuster, right? We have all those little things. That happens. That's progress for, right, a better society, for a more productive society, for a society that grows better, where more people participate in, right? That's the end goal. That's where we're going to go.
It's a big deal, and maybe we go a bit sort of deeper in that, because it's very much like, I'm sure you also started your career somewhere around the pop of the internet bubble, or maybe a bit before, maybe a bit after. But I remember Cisco being a name, right? And a lot of people I remember, as sort of still a young analyst at the time, a lot of people couldn't get their head around why that stock was so important, and it was because it was basically laying the infrastructure of the internet. Well, NVIDIA is kind of the similar story for AI. How about the application layer? As we're recording this here in early 2025, there's a lot more focus now on software, especially since DeepSeek even more so. How do you kind of see this play out? Because it's not going to be NVIDIA all day, every day. There will be sequences, just like we had, back when the internet got built out. How do you kind of see that through?
The winners here have not yet been crowned, right? We're still in the early stages of this. So to assume that the only way to play this, or the direct way to play this, will remain NVIDIA, that's going to be a challenge, right? Whenever a company grows and at the rate that NVIDIA has made as much money as NVIDIA, well, that's obviously going to attract competition. Now they've got to jump on everybody. You mentioned DeepSeek. DeepSeek basically sent a Scud missile, right, into the business of OpenAI with ChatGPT, right? You've got a new technology that was developed reportedly, right? So the information exactly isn't clear, so we'll check back. But the information on the ground as we have it right now is that they developed this in really quickly with less than $6 million, using NVIDIA chips that they were able to get their hands on. How exactly that happened, unclear, at least to me. Maybe other people know more. But the point being is that they have a better mousetrap, and it shows that there's really not a moat around the software side of this. So long story short, I think when we look back at this, there will be periods in time when if we create a timeline and we say, this is when there was a remarkable event that altered the path. I think DeepSeek will notably be one of those moments. It has huge implications for the accessibility of AI, for the adoption of AI. all for the positive. The media is labeling this the Sputnik moment, right, from going back to 1957, when the United States was of the absolute belief that they were far ahead of the Soviet Union when it came to satellites. And there you go. Sputnik came out and launched the first artificial satellite out there, and then it shocked the world, and then that led to the space race, right? That's where we are, where they shocked us, right? We thought we had this huge advantage. In reality, we didn't, especially on the software side. We thought we can control the chips. Well, we didn't, right? You can borrow these chips, right? You can go on the cloud, tap in, and get access, right? So the world is not exactly as most people thought, and things are going to change, and it's going to accelerate adoption. It's going to accelerate the usage of this technology, which in aggregate is a great thing.
Yeah, I mean, so I think we're probably saying the same thing. I still see a lot of people, it's only Nvidia, it's Nvidia every day, all day at any price, and I think that is just, something maybe to be a bit mindful of. And as you say, we don't know what the winners are yet. I think, if you look at some of the companies that came out of the internet build out, I mean, most of them didn't exist back in the year 2000, right? So that's probably a pretty good point. Um,
Yeah, Yahoo's market cap was bigger than Google and the rest, right? So this is not Apple as well, right? So things change and things will change, and the future is going to look a lot different than what it looks like right now. And the winners and losers, I said this before, I'll say it
yeah.
again. The winners and losers have not yet been crowned. And DeepSeek was a clear sign that things are about to get different and competition is going to heat up.
Yeah. Is there a specific ETF that you guys have that focuses on like that growth aspect of it? How do you?
SMH is our best direct play, and that's hallmarked by NVIDIA.
Yeah.
Right now, we still think NVIDIA is in the leadership position because those chips are in demand, and we don't think that changes in the near term. So we think SMH is still a great way to play that. But if you believe in what I believe, then adoption is going to, again, drive efficiency. Efficiency is going to drive growth, and that's going to broaden out economic growth, and the participant list is going to broaden out from there as well. So it will merge from concentrated technology, semiconductors, to broader-based technologies, those that are making the investment, to then that will filter out and will go wider, and companies will participate. Right? That's the view.
Yep. Yep. Got it. Well, that's good. So SMH still, again, as we build out the sort of the infrastructure, and then one step at a time. We will reconvene at some point in that as well. That would be awesome. Um, okay, so that's AI. Let's talk about the second theme here, which we said we're going to touch on the inflation part. Um, where do you see? I mean, I'm assuming nothing much has changed in your view since we met in September, I think it was, of last year. I certainly don't see anything different. In fact, if anything, I see more and more reasons to be bullish on inflation. What's your take?
The inflationary pickle that we find ourselves in is the result of irresponsible, right, reckless spending that's been going on for decades. That's culminated with excessive debt. There's been crises that have accelerated the path of that, but we were on that path anyway, right? So this is a function of overspending, and regardless where you sit on the world stage, everybody's got to be responsible when it comes to spending, because there will be a time when you've got to pay that back, and that's effectively where we're at. So fiscal excess, right, being supported, right, historically by lower interest rates. Now we've got higher interest rates that are compounding the deficit issue. All this comes down to a very simple debt trap, where we don't have a lot of options, and inflation is what's going to help us out, because we are going to, again, I said this before, I'll say it again, we are going to pay back yesterday's debts with dollars that are worth less through inflation, right? Growth will help us out as well. So let's go back to the AI theme. Above trend growth is going to help us get out of that. Inflation is going to help us get out of that. That's the path out here. I don't see that changing. And don't be fooled by political theatrics. In the United States, we've got this Doge Commission. We're going to go out, we're going to find excess, and we're going to stomp it out, right? There's no doubt that they're going to find pockets of inefficiencies, and there's tons of fat to trim there, right? So they're gonna have at it, and they're gonna have successes, and they're gonna jump up and down and get on Twitter and everything else, or X, and they're going to talk about their successes, and everyone's going to be excited about it because in theory it's awesome, right? You don't want to have wasteful spending. The reality is that they're going to continue to spend on different things and continue to overspend. And then last night, President Trump on TV talking about how the United States is going to take over the Gaza Strip. Well, sounds great, but it also sounds really expensive. So I think that's just another example of, while we'll cut spending in some areas, we're going to spend differently in other areas. Net, we're still going to overspend, and we're still going to have an inflation problem. And investors need to protect themselves and not rely on the government to fix this problem that they put ourselves in.
That's a really big point, and again, one that I continue to bring to people's attention, and quite frankly, it does resonate with people, is because they do see, you go to the grocery store, you look at your whatever bill, you look at Netflix, for example, or that seems to be going up, right? It all has an inflationary tailwind. So people enjoy the idea of being able to sort of beat inflation as opposed to getting beaten over the head from inflation. But you mentioned something really important, and I'd love for people to kind of, really think about that, that we're going to pay back yesterday's debts with sort of, cheaper, or I guess more deflated dollars, and cheaper, in the present term. How can you articulate on that a little bit more, just to make sure people really fully comprehend that concept? Because I think it's not something that people fully comprehend. It's not being talked about that much, I think.
The mechanism for inflation is the constant creation of dollars. So if we're constantly creating dollars, the values of the existing dollars go down because the supply of dollars keeps going up. So people say, oh, we've got a strong dollar relative to somebody else who's got a similar problem. Anybody who takes their dollars out of their pocket and attempts to purchase something, they see that their purchasing power decline. That's the essence. That's the essence of inflation. Yeah. And you're trying to protect against that. And the way that you protect against that is by buying assets with scarcity. Assets with scarcity, right, inherently are not increasing their supply. So the value of those assets with scarcity rises during periods of inflation. We're asking people to protect themselves. That's all we're asking for. It's a pretty simple concept. Here's what I bump up against, and this is what drives me absolutely insane. So if anybody self-identifies in the category that I'm about to say, I want you guys to seriously think about this tonight and question yourself why we're doing this. People will assume that inflation is going to go away because they are used to growing up in an environment of moderate inflation. So they assume it's going to go away, and then they listen to the talking points from the government, which has been absolutely wrong about this from the beginning. Remember, they said we weren't going to get inflation. And then when we got it, they said it was going to be mild and temporary. And then it was extreme. They said, don't worry about it. We're going to fix it. Although it's extreme, it's going to be temporary. We're 5 years into this. We're 5 years into this. It's ridiculous. But no, it's going to go away. You don't have to protect yourself. That's asinine. Doesn't make any sense. Buy real assets. At the same time, real assets continue to outperform. All you have to do is buy assets with scarcity and protect yourself, because guess what? The people that have been wrong are probably going to continue to be wrong. Inflation happens very infrequently, but when it happens, it lasts a long period of time. It also presents itself in waves. Because inflation's falling doesn't mean we're out of inflation. It means that we're coming out of a period of high inflation into a period of above target inflation. The expectation is that inflation stays above target for an extended period of time. And this is the unfortunate truth that I believe. We believe, just as you saw in the 1940s and you saw in the 1970s, there will be a second wave of inflation. There will be a trip. The economy will trip at a certain point. And when it does, the government will respond with its print and pray policy, where it prints a ton of money and effectively buys the problem away. And when that happens, you will see one hell of a second wave of inflation. That's our view on this. Does that happen this year? Probably not. Will it happen in the next 5 years? We believe that it will. Point being, above target inflation with a threat of a second wave of inflation, and all you have to do is something really, really simple. Allocate some of your assets to asset classes with inherent scarcity, and all is good. That's the ask. I think it's pretty simple.
I think it's a concept that people understand, and so I think you put that very nicely for people to digest. On our end, we do think, one of those things could be gold. You have things like copper. Is there like an ETF that you guys have that you believe is kind of something? And obviously, again, we're not giving investment advice here. This is purely educational that people could have a look at for this one.
One ETF to consider is the VanEck Real Asset ETF, tickers RAX, RAAX. It is a diversified solution of real assets with inherent scarcity. Gold, commodities, natural resource equity, infrastructure, REITs. Those are the core assets that it owns. And that's a good one-stop shop or the easy button for real asset investing.
Gotcha. I think we actually discussed that one last time. So that's perfect. All right. So we've gone through AI. I mean, these are some big points. I hope everyone's enjoying this. So we got AI, we got the inflation. Lastly is the energy thing. And I've been pounding the table on energy now for probably, 6+ months. The energy demand story, which really is what this is all about, does also have a lot of, or at least rhymes very closely with the second theme we just talked about, inflation. But talk to us about the energy theme from your perspective, energy demand, and that of course also ties in with the AI, as people know. What's your thought?
DeepSeek impacts this as well, because one of the things with DeepSeek is not only did they develop it fast, they developed it a lot cheaper. It uses a lot less energy. So the whole idea was you have to spend billions of dollars to develop this technology, and then it's going to require tons of energy. And then you had these really big expectations of how much energy is going to be needed. And I've seen by 2050, the world's going to need 3 times the energy demand. All of that stuff kind of seems a bit pie in the sky, but what's clear, at least to us, is that I don't know how much more energy the world's going to need, but the world's going to need a lot more energy. Yes, the electrification of the world is going to be an important thing, the rising middle class, people moving out of poverty and expecting more to be able to drive a car and have all these technologies that are accessible to the developed world. All that's very much intact. And we believe as these technologies become more accessible, you're going to need a lot more energy. Now, in the near term, that means you need fossil fuels because that's the energy that we have. And you need common sense energy policy. We've spent trillions of dollars in the pursuit of renewable energy, wind, solar. We don't have a lot. That money was spent, but we don't have a lot to count for that. Right? We spent a lot of money and we didn't get a lot back. The cool thing is that there's actually proven technologies that can support this. We're talking about nuclear technology. There's been significant advancements in nuclear technology through small modular reactors, thorium reactors. There's a lot of different cool technologies out there. We have a technology in nuclear that's proven. It does not have carbon emissions, and it meets the energy demand. We just have to unite in the path towards that, make the investment, which you're seeing now out of Silicon Valley. They're coming out and making investments and partnerships with different nuclear firms. That's the path we're going in. So near and medium term, we're really optimistic about nuclear energy. And the last thing I'll say about this is that economics will solve this problem. He or she who has the advantage in energy has sustainable, durable energy source at the lowest cost. They're going to be the most productive. Right? They're the winner. So, you could red tape this up as much as you want in the developed world, while China's got 20 plus reactors in development. At a certain point, people, all these ideas, right? The best and purest of ideas about wind, solar, and all that kind of stuff. If it doesn't make economic sense, it's not going to work. And the people will demand these technologies. They will demand cost or more efficient energy sources, and that's where we're going to get to. And I think that's the aha moment. That's the big moment the world's going through, and that's the big transition you're seeing. It's not green at any cost. It's what makes the most sense. Common common sense technologies. Right now, it's resource, it's fossil fuels because that's what we have, but we think it's going to be nuclear. Now, I could be wrong in that in the case of there's a huge advancement and a new technology emerges. But in the meantime, I wouldn't bet on that. I'd bet on nuclear.
Well, and it's all interconnected, right? So you're actually going to need the stuff we currently have, as you say, which is fossil fuels, to build out even some of these nuclear things. And then to the other point you mentioned, I heard a really great quote out of I don't know who said it, but it really resonated with me. It said something to the extent of, the more energy you have, the more AI power you're going to be able to generate. AI, I guess AI power. So it's all interconnected, these things, AI, inflation, energy, all connected. And I know this for a fact, the ETF for nuclear is NLR that you guys have.
Correct.
Is there another one that I'm missing there?
No, that's NLR. You do get some exposure to that through RACs, but NLR is our nuclear ETF. It's been popular. The theme isn't going anywhere. We think it's here to stay. Now, will it be frustrating at times? We think it will be, because it's going to take some time to figure this out to get to scale where they are, and interest rates are higher. So I could see people becoming impatient at times, and I could see volatility in these assets, and that's fine. We're talking specifically about nuclear, but we do think the end game is towards nuclear, and we do think it will be a great place to be an investor over the medium to long term.
Definitely. It's going to shake out the weekends like it always does with these things, and Rome wasn't built in a day. Just real quick, what is your view on natural gas in this latter point? How do you see that play into effect? I talk to a lot of guys that are very smart in this space, and they say that natural gas is kind of like something that's going to get us from here to nuclear. How do you see that?
It bridges the gap here in the United States.
So you would agree with
that? We've got plenty of it. It's accessible, and it bridges the gap.
Perfect.
The thing with technology is that we will say this often in our commentaries and when people speak to us. I just want to emphasize exactly what you're saying about everything being interconnected. Technology is compounding on top of each other, and it's all interrelated. It's all driving in the same direction, and that direction is efficiency and ultimately economic growth. This is an exciting time to be an investor, but it's an awesome time to be alive, because things are changing at lightning speed. And I truly believe in the course of the next couple of years, things are going to be very, very, very different. It's going to shake things up in a way that I think people are having a hard time understanding. And that's the world that we're in right now.
Yep. And it's, as you say, it's not linear. I think just from a risk management perspective, I do want to remind people, as you say, it's not linear. There are going to be hiccups along the way. We don't really know most of the AI winners yet down the road. We know what we know so far, and that's, I think, what you're laying out here very nicely. But this is a great game. It's a lot to digest. I hope everyone that's just getting to this point of the podcast here, go and get some coffee or tea, or do some yoga, whatever, just to digest this. There's a lot of stuff here. David, thanks so much. Really appreciate your insight. Fantastic as always. And I hope to have you on again next time when we have an update.
Serge, thanks so much. Definitely enjoyed the conversation. It was fun, and I'd happily come back if you invited me. So thank you so much.
Wonderful. Thank you, David. That's David Schassler from Venick. Thanks so much.